What is going on, investors? Back again. We're going to take another look at Roku, ticker symbol ROKU. Seems like I did a video on this one not too long ago after they reported earnings. They reported earnings again today. We'll go over kind of the high level numbers. We'll get a little more depth in here, and then we'll jump over the stock chart. I think there's actually something really interesting here as well. I've actually been trying to buy this stock. I had a much lower price target. I think the video I did back in July was right around this area. I was trying to get it right at $100 per share. I think I was a little too greedy because, as you can see, it's bounced up from there. But as you can see today, after they reported earnings this morning, this stock has been selling off quite a bit here, over 7%. And so it's kind of caught my eye, it's definitely a stock I'm interested in. Now, some of the commentary on the conference call, the management was they were like very bearish on advertising for the rest of the year because of the situation we have going on. A lot of advertisers are obviously pulling back. There's a lot of, airlines aren't advertising, travel companies aren't advertising, but I think makes a good comeback story if they can, keep things together. I'm sure advertising will likely come back maybe next year, second half of next year, maybe even into 2022. But again, I'd like to get this stock at a good price. And so let's jump into the data here. This is kind of some high level stuff here. They got active accounts here. So obviously that's up. We're up 41%. I would say this is probably the best time in the world to be like a Roku or a Netflix or a Hulu or something like that, or Disney Plus. I think this is the best time ever to have one of these services. Will this kind of growth continue? So while management was like bearish on advertising on the call, as I go through this, I actually think investors are actually seeing something else with Roku. I'll point it out here in a minute. So streaming hours, again, greatest time ever to be a Roku. Their year over year is up 65%. Look at this streaming hour. ARPU, which is average revenue per user, that's up 18%. Okay, so that to me is the first sign where I'm not like thrilled with that. Okay, obviously we know it's on a backdrop where advertisers could have pulled out, or there's just not as much advertising. So we can give Roku a pass on that one, but you've got this strong growth. Will you see this strong growth next year? Let's just assume this time next year, everything's great. You can go on a cruise. You can go to a baseball game. You can go play golf. You can do whatever the heck you want. Will you experience this type of growth? Will this growth still be here? Will these customers still use the platform as much? I think that's questions investors are really asking themselves. Finally, platform revenue here, we see up 46% here. We'll go into it slightly more in depth here in a second, so I won't spend too much time here, but I wanted to come down to total operating expenses. Okay, so we've got total revenue up 42%. That's awesome. I mean, that's great. Total gross profits up about 29%. But take a look at what's also up. Total operating expenses are up 52% here. And so this is a platform that's literally in the greatest moments ever to be in existence. And their expenses are up 52%, and their active accounts are up 41%, and their average revenue per user is only up about 18%. So as we can see here, income or loss from operations is actually up 306%. So this is a company that's scaling up and it's looking good, but loss from operations is actually accelerating. Okay, take a look. In Q2 19, they lost, I'll call that only 10 million, and now you're losing 42 million. So it's not great from that perspective. And I think really outside of the management's commentary on the advertising business, I actually think investors are looking at that more. So let's take a look here. 3 months ended. We got June 30th here, and we've got the previous period here, and then they give us a 6-month view here. Obviously, everything's sunshines and roses on the top line. We've got plenty of people on the platform. It probably could be better, again, if the advertising business was a little fresher. But total net revenues look really good. And then if you take a look at the cost of revenue here, I remember going this over on the last time we covered this company. Man, this is a nicely high margin business. They pretty much give these players away. I mean, they make a little bit of money, a little gross profit here, about 8 million here, make 18 million here. That's not insignificant. This is not that big of a company. But really, you're looking at these platform revenues where you made 138. So you take this number here, this 106, minus it from 244, and you get the 138 million. That's for 3 months. Over 6 months, it looks like we made about 270 million, which compares very favorable to the previous period where we made 203. So we get a total gross profit down here of 287, almost $290 million for 6 months. Times that by 2, and you're doing pretty good. That's about close to $600 million worth of gross profit. But here's the rub. Come down here, we got other expenses too. Okay, we've got research and development. We've got sales and marketing. We've got general administrative. We got other expenses here, and those are pretty hefty. So we take a look at our expenses here. On the 6-month view, we made 287, but we spent 385 on these other expenses. And even for the 3-month view, we've spent 146, but we spent 189. So that's not great. For the 6-month period, we lost 97. That compares very unfavorably to the 21 million that they lost in the previous period. Take a look at this. We went from $10 million in the previous 3 months, now all the way up to $42 million loss. So I don't think you can equate this all to advertisers just not being there. There are plenty of advertisers out there. Sure, the market is a little bit light, but take a look how fast these expenses are growing. These expenses are growing faster than the top line right now. So that's a problem. It could be a management thing, could be a leadership thing. It could be that they just see more blue skies ahead for Roku. Personally, I just see more and more competition coming into this space, not just a Roku type device, but just our entertainment time is going to become more constrained as we move further and further from this health situation. We're all praying for a vaccine or a cure or treatment or any combination of that. And once that is here, we're going to be able to go back to the movie theaters. We're going to be able to go back on vacation. We're going to be able to do things that we aren't able to do now. How is that going to impact Roku? I think investors are intelligently asking that question. I think it's actually a good question to ask. We see we're getting diluted a little bit here. We went from 114 to 122, 112 to 121. Not as bad as I've seen not as bad as that Virgin Galactic dilution that we saw today. It was like $400 million, I think, but it could be better. Now, from current assets, so they're losing money over here at Roku. Obviously, we're losing net loss here. We'll call that $100 million. That's for 6 months. So we'll say it's $200 million for a 12-month period, or just under that. Well, I mean, we're really kind of really doing back of the napkin kind of estimates here. But this is a very well capitalized company. Notice here, back in December, we had $500 million. Now we're up to $800 million. I'm going to assume they raised some money, maybe in the debt markets, but they probably did it with issuing shares, is probably more than likely. Everything else looks really nice to me. They got these accounts receivable here, that net of allowances. So you put that accounts receivable up here into the cash balance, and they're actually doing really well in terms of capitalizing the business. Now that you do see they have some long-term debt and things like that down here. We've got long-term debt here at 92. That's paid down a little bit from the previous period. They've got the current portion of debt. But $92 million in debt sounds like a lot. But when you got, you count these receivables and this cash here, and even maybe restricted cash, you got north of $1 billion, basically, or right around $1 billion in kind of liquid assets. So that's that's something that can be easily financed away there. So no problems there. From a cash flow perspective, actually things look really nice here. We got 14 million in cash flow in the previous period, all the way up to 80 million. So that's really nice. And then finally, we come down here to financing activities. Proceeds from borrowings, I see. So they raised, here's the 70 million that we saw cash kind of tick up nicely. Proceeds, I see. Here we go. So at the market program, this is basically like issuing new shares. They usually call this ATM, at the market program. So they have this in place. If you dig into one of the 10Qs or something like that, they'll probably tell you how much more they have left of this. And so notice they did 179 in the previous period and they did 349 here. So they are issued. It's like an ATM. It's basically the shares of the company are like an ATM. And so I don't think that's why they call it at the market, but that's the acronym that it's used. And Roku is using their shares like an ATM. They need money. They issue shares. There's a buyer for them right away, essentially. And so they raise this money here. Just want to make you aware of that. You as a common shareholder, you are being diluted here, but it's not too bad, especially on a company like this that's growing like this and does have some real revenues. These ATMs really are disastrous when the company's kind of like pre-revenue, pre-product type of thing. You're just being diluted and diluted until anything comes through the door. Whereas a little bit different with Roku, they are growing pretty much everything, but including these expenses, which I really actually think that's what investors are focused the most on. Now, let's jump over the stock chart. What do we got going on here? I did an article, or I did a video on this stock back somewhere in this range, and I thought for sure I was going to be able to get the stock for I was set right at 100, because you see this bottom here and this top here, and there was a gap here. I thought for sure this stock had a shot at kind of getting to this gap and maybe even filling it all the way down to 96. I probably wasn't going to let it get there, but I was going to buy at this top and this bottom, which was right at 100. Now, unfortunately, it did not do that. It came so close. I remember my video was somewhere in here. It came so close. I literally had the order set in. This is discipline for you. I'm not saying everybody watching this has to have that type of discipline, but I'm the type of investor, money doesn't burn a hole in my pocket. I know we've got a lot of younger listeners watching these, and money kind of burns a hole in your pocket. That's the natural thing when you're young. You get paid, you go buy some Nikes. You get paid, you go buy an iPad. You get paid, you go buy something, or you go buy your girlfriend something or whatever. Well, as you get older and you get my age, money doesn't burn a hole in your pocket. And so I was very disciplined. Obviously it would have worked out if I had bought in shares in the 108, 105 range, sure. But I'll live another day and maybe get shares at another time. But here's my main point here is we made a low back here like most stocks did in March. We're still in a sustained, here's today's action, this big red candle right here. We're still in a sustained uptrend in this stock. In fact, it has pulled away from this trend line. We see here the stock pulled away from the trend line. It came back. This is about when I tried to buy the stock. I probably should have, I really probably should have seen it hit this trend line and could have pulled the trigger there. I could have pulled the trigger here as well at 113. But we're even after this down day today, where we're down, 7% in a day, we're still way over this trend line. This trend line, if it pulled all the way back, it would be back in the 130s. So am I going to stay greedy here with Roku? Yes, I'm going to stay greedy. I'm going to wait until this stock pulls back to this trend line. And I actually think it might. And in fact, I think it has a shot, to get back into the 130s, 137s, maybe 140s by the time it makes it back there. Whether or not it does it, I don't know. It's one of those things where you kind of have to roll the dice. I'm not dying to get into the stock, but I see a lot of levels here. Yeah, there's actually a nice level right here. So right where these trend lines, right at the 137, 138, I think if you want to be a little greedy, you could bump it up to about 140. That's where I'm looking to buy shares. Whether or not you want to wait that long, I'll let you decide. And plus, again, looking at these numbers, this is the greatest time in the world to have a streaming company, and this company still is not making a profit. Their expenses, I don't want to say they're out of control, but they don't seem to be scaling up very nicely. That being said, if they can maintain this level of accounts and streaming hours, if they can just maintain that and the advertising market comes back, then I actually anticipate this average revenue per user to start ticking up. How much? I don't know, but maybe then they can start pulling some levers on these expenses. Maybe they can cut back on some things. Maybe they don't need to spend as much money there, and then they start squeezing out profits, which would be a very interesting thing. So this is an $18 billion company that's probably still a little rich. It's way up over its trend. I personally would wait until this one pulls back like it did here. You notice that this stock retested this trend line several times, and now we're way over trend again. And I want to say somewhere around here, it reported earnings probably. And so it was way over trend, pulled back after earnings, trended up after earnings. And now we see the stock is breaking down a little bit again. Whether it comes back down here, we'll find out. So there we go. That's Roku for you guys. again, a stock that I like. It's not a product that I use, but I like their business model. I like the advertising business model. I think they're well positioned, even though you have lots of competition. I think it's a company that's pretty well positioned. It's a little overvalued for my taste right now. And again, the stock is a little overextended. So I am, again, still waiting for this one to pull back. I'll let you decide if that's the right decision. Leave me a comment below. Do you agree? Do you disagree? Am I crazy? Am I right on? Let me know. Hit that subscribe button as well if you enjoyed our content. We'll be back again soon with more videos. Thanks for tuning in. Good luck with your investments.